welcome to another week right here. We're just gonna briefly be looking at our USD card, which is our key highlight of the week. Last week we had this review and analysis, and yeah, it started to move in profit, right? It started to move. We expected a rejection right on this level, but based on our setup, we're waiting for the break of this line right here, which is on 1 hour for us to, make the push it downside. When 70 pips, and right now price is back on about 25 pips, on break even so far. So now, what do we expect for this new week as we consider writing this, right? We gave three scenarios last week, for short-term trader, for medium-term trader, and for long-term trader. So, but I'm not really going to be talking about the long-term trade thing right now because most people are in already, and definitely we're looking to make some profit on the medium term. So what had happened last week? It's very simple. So to get what had happened last week, let's go to the 1 hour 1 hour time frame. It was simple. Later during the week, if you guys remember, we had a mobile analysis, with this as the stop, and we said price was gonna come to this level, reject this level, and form into some kind of like a triangle, a triangle pattern, right? If you've gone through the no battery course, you should understand better this. And what the price do, it gave us the top right there before it gave us the break, right? And immediately we saw the break of this level, we actually go into the market. Price went 55 or 56 pips in profit first. We expected, from our setup, what we said was we expected a retest right on this level before we could be having the next phase of push, and which was exactly what price gave us on the long run. So let me bring that out. Let me see if we could find it. Okay. So yeah, this is it, right? We had the setup, and we said we're gonna have a push, a downside, a retracement, then the continuation of push, to the downside. And definitely prices started to do that. You can say the retracement push, then the continuation of push and downside, right? So now let's get straight to the point. So for we to understand what to expect this week, let's clear the chart a bit, and let's go to the weekly time frame again, or monthly time frame, because obviously we had a monthly close. So let's get straight to the monthly time frame again to see what had happened, so far on the monthly, and let's resonate and make sense with it. So during the course of the week, we had the new monthly close, right around this point, right? So what do we have? So looking at our previous analysis that we had, we said we saw the push, the break below this level. We saw the consolidation right here, continuation to the downside, which after this push, we expected a further push, to the downside, right? Fundamentally, CAD is getting stronger. The demand for crude oil is getting higher, and plus local fundamental, going on the Canadian economy, which is posed the Canadian dollars to be really strong. So getting on the weekly level, we identify our theory zones right after the major break of this gray area, which is the major monthly mid-range zone, right? And we said after prices after price broke this level, we may have lower lows, lower highs, the lower lows, the lower highs, lower lows, the lower highs, and low. And we expected a lower high right on this level. So what do? We brought out our Fibonacci, right? Off of Fibonacci, we have the 61.8 rejection right on this level, and we said we expect the price to reject around this level. So apart from the fact being the Fibonacci resistance, we have a mini horizontal support, turning resistance, just like it has happened in the past, right? Horizontal level right here, horizontal support level right here, turning resistance. Horizontal support level right here, turning into a resistance. So we said we was expecting that actually on this pair. So what do we have right here? Support or resistance. So apart from that, we have the Fibonacci resistance, and apart from that, I think we made sense with this on the daily time frame to say we have diagonal resistance as well, which is the trend line, right? So bringing it to the daily time frame, right? What do we have right here? We have our zone of rejection. We pointed this out last week, and we said this if this any zone of rejection, definitely was gonna have the rejection level right on this point. So makes sense with things better. You can see this is the diagonal resistance right here. So we have three resistance level. We have the Fibonacci resistance, horizontal resistance, and we had the diagonal resistance, which makes it makes sense more, right? So what had happened since last week? Now we're trying to project into the new week now. So after price rejected that, you can see a very strong bearish candlestick, right? Bearish candlestick right after this rejection. Price cannot break above this level. So after the bearish candlestick, what do we have right here? Right, we have the break of this last support level. So price broke it on Wednesday. On Thursday we have the continuation. Price acted like it was going to go, but it later closed as a very strong bearish armor, right? And price is giving us a retest. So what do we expect this? We expect a further push to the downside, but not just anywhere to the downside, to the 61.8 Fibonacci level. If there's any level of support, it's got to be the next 61.8 Fibonacci level, and that was the reasons for our trade last week. So what do we have right here? If price could make this move, it could be having a very good over 100 plus pips, which we had already found our entry and we're riding. So let's take it to the 4 hours time frame now and see what price is doing on the 4 hours time frame. So on the 4 hours time frame, things get a little bit more amplified. We can see things better, right? So when price got to this level, this was the support we're talking about, right, on the daily time frame. So when price got to this level, what the price started to do? Price started to move on a higher highs or higher lows, right? Push higher highs, higher low, higher highs, higher lows. And we knew very well, with experience in the market, that when price is doing that, price is forming into a rectangle, right? Price forming into a rectangle means price is consolidating, ready for the next phase of the sell, right? So this was the rectangle that we spoke about. So we have the push, exhaustion, push, exhaustion, push. And we say if we see a close below this level, then definitely we're going to strike an entry. We saw the close below, and we're waiting for price to give us the new lower high before we break even a trade. The trade is now break even. So now what do we expect from the market? What do we expect the market to do? For this new week, price is booking this key level, right? This was where the consolidation started from, right? So when price broke this level to the downside, we know that, the barrier was down, right? So what do we expect? If price should break this key level, all of this, we have the push, right? We have the exhaustion. We had exhaustion right on this level, right? And we have the next phase of the push at this level. So what did price do right here? Price broke the critical level right here. So it's only expected that sellers are going to rest, and buyers, are going to find the injection and have the injection to the market to create the retest. And definitely we're gonna have the next phase of push to the downside to hit our TP in the early hours of next week, right, or in the early days of next week, right? So apart now, that being said, what are technical reasons behind this? Number one, we have the key Fibonacci level. This is 61.8 levels rejected. So we expect the price to, make the push, down to this level and just give us that. So on the 1 hour time frame, we can actually amplify things even a little bit more furthermore, right? So we have the break of the rectangle, we have the exhaustion. So what do we have right here? The push. This is an exhaustive move, and if you bring out the 61.8 Fibonacci right here, you're going to see the price is actually rejecting the 61.8 Fibonacci, and we expect a further push to this downside. So this is a situation whereby price made the push right back to this zone. This zone was not broken by the time price made the push. You can see the push, you can see the quick rejection, exhaustion, the push below, finally breaking and retesting this zone back again, then having the next phase to push to the downside. So right, so this is what we expect, for the market this week. So we expect price to make a rejection right on this level the price is right now, for further continuation of push it downside. So if we take it even a little bit lower to the 30 minutes time frame, so you're gonna see right here that price is forming into like a consolidation, right? And right now, this consolidation means that, okay, price is definitely going to reject, and definitely we're going to even be having a further push to the downside, a little bit of candlestick protest, then we could be having our next phase of push, to the downside. So this is what we expect this weekend. This is a very good trade with very risk reward ratio, good risk reward ratio, with our entry already on guard, and definitely we are already running risk free. But for people that want to take advantage of this trade, my advice is always wait for the market to open, let it manifest, let it give a confirmation of push, continuation of push before you join to this trade. So this is exactly what we're expecting from the price. Thank you guys so much. If you enjoyed this video, you can like, you can subscribe to our YouTube channel, No Bad Trade Forex, and you can share with your friends. You can also follow us on Instagram at No Bad Trades. And thank you guys so much, and have a very wonderful beginning of the new month.